Welcome to the webinar, How to Manage Indirect Tax Compliance and Mitigate Risk in the P2P Process. My name is Eric Wallace with Argyle, and it's great to have everyone joining us today. I have a few administrative details to share with you, and then we'll start our presentation. First, we'd like to thank Vertex for their partnership with today's event. They've been wonderful thought leadership partners to Argyle, and they're committed to providing you with valuable content and a great overall experience. Thank you again to Vertex. We appreciate you joining us today. We welcome you to stay connected during today's event. For those of you who are active tweeters, please follow us on Twitter at Argyle Exec Forum. I also wanted to take a moment to touch on our content neutrality policy, which we've curated based on the feedback we've received over the years from our members. Argyle is very proud and protective of this policy, as it reflects our commitment to ensure the neutrality and overall value of the content presented at our events. We've worked closely with our speaking faculty to ensure that you receive a set of balanced and neutral viewpoints during the session today, and we appreciate our members' support of this policy. For those of you who are seeking CPE credit today, you must answer at least 3 polling questions and remain on the session for its duration. Polls are under the Polls tab on the right-hand side of your console, right next to Chat. Afterwards, if you're eligible to receive credit, you'll receive an email with a link to your certificates. If you have any questions on credits, please email cpe@argyleforum.com. Finally, and most importantly, please submit all questions that come up during today's event into the chat section of the interface. Before we start, I'd like to have our speaker introduce himself, and then we'll begin our presentation. Larry, over to you.
Thank you, Eric. My name is Larry Mellon. I'm the tax director in the Chief Tax Office of Vertex. I've been with Vertex for 18 years, 3 years in the Chief Tax Office, 15 years in compliance, managing the indirect world of Vertex. So I'm happy to be here. Thanks, Eric. So I guess we'll start on the next slide. We'll just kind of go through and start here. So just a little bit about Vertex. We have been in the tax technology and tax space for over 40 years. We have over 4,000 customers and growing. We're also supported in more than 130 countries. And of those customers, 59% represent Fortune 500 companies. So some of our topics for discussion, we want to talk about managing indirect tax compliance. That's basically what we want to go through, but we're really going to focus a little bit more on the procure to pay process. We're just going to kind of talk through some of those areas, and we really aligned it into 3 bullet points. Why procurement struggles with indirect tax, just some of the areas about what are some of the struggles between the purchasing and how things work with indirect tax. Then we're going to talk a bit some about the risks. There's a lot of businesses out there that are still doing manual processes, and we'll talk about some of the incorrect taxation through that whole process, as well as some of the financial risks, whether it be brand risk, dollar risk, risks, all those different areas. We'll kind of dig into that, and why an indirect tax automation solution is imperative for you, why it's important to have that in place, and what are some of the key things around that area. So let's talk about the struggles. We'll kind of talk about a few things here. And we do have some overall slides, and then we have a little bit more details we go through. So some of these struggles we talk about, some of these obstacles, of course, are all through the touch points of supply chain, everything within that process of all those purchases that are being made. Now, remember, when we talk about purchases, there's also purchases that are going within your product. There are products that you need to operate your business. So there's various ways that procurement itself could be defined. So we talk in general about, they're applied in different ways, what the company might do. So it's depending, are you using these goods internally for your use? Are you using these goods to produce something? Are they going to be then created into your sale? What are you doing with some of these goods? And we're going to talk through some of those things. There's also different areas too. You have export, transportation, there's other taxes of procurement that kind of goes through. But some of the big areas that we're seeing, and we'll dive in a little bit more, are all these invoices that are being processed. How are they being managed? How are they being evaluated? Anybody who's in that procurement process, or especially anyone in the tax side, knows that there's so many invoices that come through that potentially, or most cases, they are being approved by someone who doesn't have a tax background, and they're just basically approving to say that they've received those products and services, not often thinking about what are the tax potential implications with that. So with evaluating and approving those invoices for payments without having a process or a way to view it, especially an automated system, you add yourself, you have a possibility of overpayments. The tax may be incorrect where it's overpaid. It could also be underpaid, or there could be no tax that's on that invoice. And then all of those float into potential audit risk, and we'll kind of talk through some of those. So here's our first polling question, right? So based on your experience, what is the most significant obstacle to your procurement functions tax process, right? So we can begin voting. Is it making tax calculations for indirect spend, tax solution integration or legacy systems, manual and labor intensive processes, changing regulations, law, compliance needs, or other? So as we look through this, I mean, it gives you 5. I mean, other could be pretty much anything, but I'm seeing the answers that come through and they're still calculating. And I will read where we at with those as we continue with this voting. But right now, looks like the bulk of the people, 39%, are saying changing regulation and law and compliance needs. And then below that is 31% at manual and labor intense processes. So a lot of those two areas are probably some of the key areas. And we may find that there are some people who have systems in place. I would say the people who are saying the manual intense and changing regulations potentially are bound by doing other responsibilities where they don't have a chance to have some systematic thing. And that's why the manual stuff becomes a process. Or they potentially are in a business where they have laws and compliance needs are changing often and they don't have things in place. So that's kind of why we're at. So I'm going to move on to the next. So it looks like 36% were changing regulation and 34% were manual. So that made up the bulk of the voting. So they were pretty close. So that's great. So just a footed note on here that Vertex had partnered with WBR Insights on some research on some stuff, but 59% of those unsatisfied with their tax solutions say they have too many manual interventions, as we were seeing in our polling, right? 53% they struggle with the inaccuracy and touch points. It's kind of odd. 51 plan to implement. So it's odd that this slide that was in here basically represents the two areas that most of the people had voted to talk about how they were going to potentially make those changes. That's great. All right, so let's move on to the next slide. Moving right along. Procurement and indirect tax must intersect, and it's so vital that procurement departments, we talk for those that are specifically tax professionals that are on here, we often talk about how does tax get a seat at the table and what are some of the requirements that tax has to be at that table. And especially with procurement, we find often, I usually use this general statement often, and I'll put this out here, is that most tax professionals, their responsibility is to make sure they've mapped and assigned how they're going to tax the products and services they sell, right? Most of them do that very well because they know what they're selling. They know what is going out to that customer. Plus, they know a lot of their customers would come back potentially if they notice that there was incorrect taxation. So most people know for the sales side how to tax that. What's lacking often is some of the tax professionals not understanding 100% on the procurement side, what's being done with the procurement side. How are they looking at this? How are they managing to make sure accurate taxation? And we're going to dig a little deeper as we go through some of the scenarios later to talk on that. But when we go through this working together, purchase orders, most businesses are creating some type of a purchase order for the goods and services that they're buying to get approval. But as most of us know, there is usually no tax details on a purchase order. One, because they don't know what it's being used, how it's being used. There's no integrated system that works with a purchase order to help them determine what the tax is. So often in a procurement department, they're creating a purchase order not cognizant of what the tax potentially may be, right? So then it goes through the invoice verification and posting, right? If that invoice is approved, right, businesses basically say they have a superior whose responsibility is to approve it. Once that approved, the people potentially in accounts payable that are processing it are doing what they're required to do and they get that payment out, right? There's nothing that ever talks about how do we go through the entire process and how do we make sure tax is at the table. So it's a must that anytime anybody's working with procurement, that they must work with tax. Now, we could say procurement must intersect with indirect tax. But remember, it has to be the flip side too. Indirect tax knows of potential exposures and risks. It's up to them also to reach back out to procurement. So it becomes a two-way street. So let's look at some of this consideration. So taxability mapping, right? We know that we have some type of system usually, but if you don't have a system, you're certainly doing some type of mapping. You're going to put something together that determines when we go to invoice a product or service for our company, we're going to make sure that we have accurate tax that's going on there. Same thing goes through on the procurement side. If you're buying toilet paper, you have to know what is the tax implications of that toilet paper, where that's being delivered and used, and how it's being used. Now, it's funny talking about toilet paper, but when you use something else like landscaping service, how it's being used, are you talking about products that are being incorporated into the actual tangible product that you're selling? How it is being used and how that is being taxed on the purchase is very important. So this tax mapping has to be established either by vendor or it has to be decided by area of business so that it knows to validate accurate taxing in a system-wide way to ensure that the invoice that's coming in has had the accurate taxation on there. Now, if you're someone who doesn't have a system like that, that does that, then the manual process becomes to you to determine what are some of these errors. How can we correct these errors? What can we do to mitigate and reduce these errors, right? So it's key that you have your mapping correct, right? Because you may get an invoice from a vendor that disagrees with what you had either in your system or manually in front of you. It then becomes your responsibility to see that issue before that's paid, potentially as much as you can, to see that, to then make payment back to that vendor or communicate with that vendor on the issues that you have with that invoice to make sure that accurate taxation is done from that point and especially for any future taxation at that point. So let's talk about the second consideration. So when an invoice reaches accounts payable, right? So we've gone through the process. We've got the purchase order. We know it's for X amount of dollars, but there is no tax on it. But now an invoice for that's going to be delivered. Someone had received on that purchase order and said, "Yep, this is what's here." Then an invoice is generated by that vendor. Now it comes in, right? Is that tax correct? Is there a tax engine that confirms its validity, right? If there's not, then your risk has increased. Now, remember, as we said a few slides back, many people will look at it and say, taxes on the invoice, it must be okay. It doesn't need a validation, send it out the door. Well, that could be the case in most cases. Hopefully, that vendor that you're making purchases from has a system in place that has accurate mapping, that has a system that's generating the accurate rate for their customers going out. In the ideal world, most of the vendors that we deal with should have that. They should have something in place to do that. But by you having some type of tool system in place to validate that, we'll go through that and you can uncover a lot of different areas by doing that validation. Overpayments. We have seen in the past where customers have charged the sales tax rate on an invoice based on where they are located versus where it's being shipped and being used, right? They potentially aren't doing business where you are and have never registered to collect and remit there. Now, that had always been something that had been a business decision for quite some time. We are seeing that from the Wayfair Act, that we're seeing more businesses are now required to do, and they are starting to be more compliant. But there is a chance that the vendor that you're buying from does not have a system in place that is depicting the accurate taxation where that product is being shipped or being used. Now, remember, it's not just as simple as a potential state tax rate. We have county, we have city, we have taxing jurisdictions, fire districts, everything that they come up with to impose tax at the local level. So all of those have to be validated to make sure that it has the accurate taxation for exactly where that's being done. So that you're going to look at that and you're going to see that you potentially have overpayments if that rate is on there too. But it also, by not having that accurate rate, right, whether it be over or under, continues to increase your audit risk, right? We know that when a transaction tax auditor comes in, they're looking at sales and use tax. 9 times out of 10, we feel comfortable on our sales tax. We know what we're doing, and we often don't know what's happening on the procurement side. Plus, there's also the fact that when an auditor comes in, anything that has tax on it, sometimes they don't even bother to look at that. They're like, it has tax on it. We have our money. We want to look at the things that do not have tax to make sure it's valid. So for some businesses, that's ideal. That's what they want. Oh, okay, the tax ones are out of the way. Let's not worry about them. But that's also going to come down to your comfort level to know, are you sure that you've taxed these correctly? Have you overtaxed? Is there a chance of a refund? Right? Is there something I've done wrong and tax should come back to me? That should be something that comes into every conversation you have under audit, is to make sure, as much as the auditor is going to be trying to find areas that did not have tax, nor did you self-assess, nor did you book a reserve for those amounts, they're going to look for ways to find that tax. You also have to have that conversation to definitely make sure that anything that has tax that was overtaxed certainly gets reduced as well. Again, if you have questions, please put those in. Be happy to answer those either as we go along or at the end. So let's talk about this third one. So now we're still talking about how these intersect, right? So if indirect tax is improperly calculated, right? Tax department is often called, right? Tax department's got to step up. Hey, this isn't right. So then it becomes the tax department's burden, and I'll use the word burden loosely, but it comes up to the tax department to potentially straighten out that issue and make sure taxation is accurate, right? So it as much as it becomes an issue for the tax department, it becomes a point where the tax department can see and recognize an issue and stop it at that point, right? As much as understanding that the tax is incorrect on these purchases, the biggest piece is also understanding that, seeing if you agree with that or disagree on that tax. But the biggest point is, how do you address it and how do you address it going forward? If anybody has been in a procurement audit with a sales and use tax audit, and they find that there was vendors who did not tax accurately, and you wrote a check for that audit, right? The key for you, one of those key takeaways, is to ensure that you go back to those vendors and make sure they've corrected it. If they're unwilling to put tax on based on your order, then you have to self-assess that. Regardless of whether the vendor makes the change or you're self-assessing that change, a correction is needed so that you're not writing that check again to that same taxing jurisdiction. So put yourself in a state auditor's position, and they come in and they provide an audit for you, and they find an issue on your procurement, and you have to write them a check. The chances are significantly increased that in 3 to 4 years, when the next audit cycle, depending on the jurisdiction, comes up, why would they not come in? They got a check from you. They're going to come back again. It's part of your requirement to make sure that we take any future invoices that come in based on what you have learned through that audit, to make sure that you've adjusted those invoices so you don't have that issue again, right? Because that audit exposure is going to continue to increase. Once one vendor becomes a problem, the state that was auditing you is going to go back to that vendor, right? They're going to go back to that vendor and say, we audited you at another company and found that you did this incorrect. Now we want to see everything. Some of the issues with that is that now puts your vendor in a bad place to be compliant when you had the opportunity to share with them to make a correction. But then it also increases your audit for any type of other vendor that may do similar practices, that may have similar products and services that are delivered, and that may tax you in a similar manner. If the state jurisdiction potentially has come in and has deemed taxation one way, but you have mapped it and you feel as if it is not, and it's not something that you can support, they're going to share that information, and I'm sure you're going to see other states come in as well. Right? So let's keep going. So as we addressing some of these problems, right? We're saying procurement teams. There's a lot of things that procurement teams need to take a look at. So why don't you guys read that for a second while I take a sip here to move on. So maintaining the accuracy of a master data, right? The data is going to be the most important piece, right? If you don't have the data that's set up what that procurement is purchasing, how it's being used, what's being done with it, if that data is not accurate, the taxation on that can't be accurate as well, right? Discuss taxation on purchases. Now, one of the big things I say with this is, if anybody on here has been through an audit, what is the one thing that an auditor is going to look at 100%? They're going to look at capital or assets, right? They're going to look at everything that you purchased, right? Because they know that that's where the biggest spend is. We're putting in a new parking lot, a new HVA system, new fork trucks, new anything to run your business, you're putting new equipment in. So they're always going to look at those capital purchases, right? That's a perfect opportunity for a tax department to get with a procurement department to look at everything they're buying and saying, hey, before you close that asset finance team, let's look at all the invoices that make up those larger assets. And if I can look through them and see what vendors have charged accurate, which ones have not, where do I assess, and I can accrue for that, I can check the box that assets are completely reviewed and we have zero exposure. So when that auditor comes in for the next time and says, we want to see it, you're comfortable in knowing you've validated that stuff, so it's not an issue. Also, exemption certificates, right? We often look at exemption certificates. Taxing jurisdictions will look at, for audits, they will look at what exemption certificates are in place to see if they're valid. Plus, anyone who in the procurement department, I use this lightly. I find that there's a lot of, I'll say, accounts payable departments, not picking specifically on them, but they will look at it and use an exemption certificate as a get out of tax free card. They send that out to whoever will take that. And if it sticks, then they're not paying tax on that. But taxing jurisdictions will look at that, and procurement departments should have an understanding of the basic concepts of what an exemption certificate is and where is it applicable in the business. It's not a blanket that's used for every part of the business, but it has to be discussed what that can be used, right? So also address tax issues with tax departments. So procurement has to look at this and say something's up with the procurement and how we purchased and how taxes. Have that discussion. It has to be a partnership between the two areas to make sure that anything purchased has accurate taxation to mitigate risk going forward. So we're going to switch, talk about indirect tax automation, and it's in how imperative that is, right? So here's our next polling question, right? What percentage of your tax determination process is automated, right? So what do we have for automated? Are you someone who is less than 25%, 25 to 49? Are you about 50? Where are you at in your process? So it's not looking too good, because right now, if I look at our numbers for the volume of people that have voted that are on here, we seem to have a significant percentage of people that say less than 25%. Now, I think that what happens with that, that's as we watch these numbers to come in, what happens with that is often there are a lot of people who don't have an automated system, especially on the purchase side. They focus, as I said earlier, more on that sales side, but they just figure purchasing is fine, processing, we're making our payments. They're more concerned often about how their invoicing and stuff looks going out to their customers versus the vendors that are keeping the business running on the backside. And I can understand that. I think that most people are concerned with audits and how they would happen on the sales side, but not on the purchase side. So we have a good number of people voted here. I will say that we're a little bit more. We're about 65% of the people have voted so far. 22% are less than 25%, and then we have 22% are about 50, and 16 are more than 75. So the bulk of it, almost half, is less than 25, and then we have a pretty sizable, distance of the other half being 50% or more than 75. But with that said, that seeing that there are so many people, 44%, or yeah, 46% were less than 25%. That's telling me that if you were one of those people that voted there, probably have a significant audit risk and exposure. You may have manual processes in place that help you with that, but I also think that it's going to be difficult to accurately maintain a manual process for all these things. And I would suggest anybody with that 25% really seeking out to try to find ways to automate what they're doing. All right, so let's kind of move on to our next slide here. So some of the benefits we talk about automation, right? There's a strategic insight, right? We look at that. What do we want to do? We want to make sure we're compliant. Everything from the time we talk about what we're going to buy to the time we send it to a taxing jurisdiction and submit payment. We're always thinking of all that. What is the best way, right? It's going to improve efficiency. A lot of people looked at automation and said, well, I'm going to lose people for this. No, it's going to improve to make things more efficient. That gives you bandwidth to do other things, right? Reducing risk is a huge thing, right? There's so many manual processes that people have in place that there are risks out there that some people here are shaking their head saying, I have it. I don't have time to look at it. I don't know what I'm going to do with it, but they understand that risk is there. And then they need to work to generate some way to capitalize on that risk to at least quantify that, right? You're going to strengthen your audit defense by having it, because then you're going to know how things were taxed and how they were sent. You're going to have an automated system that's making that decision that you've mapped. Anything that hits that category or hits that area of business, it's going to go through the process that you've already deemed how the taxation should be on there, and it's going to increase your compliance and reduce the audits that's there. Accelerates growth. Anybody who's in a tax role or any role, if you have some automation in place, you look at it that potentially it's freeing up bandwidth of people and the negativity of that. But no, it's not. It's freeing up people to accelerate and do other things. There's other areas of exposure that exist that this gives you an opportunity to spend more time focusing on there, as well as continuing to automate and continuing to grow that automation as tax kind of changes there. So here's some of the things that we listed here that are some of the benefits of that automation, right? So we're saying effective integration of procurement systems with a third-party engine, right? So some of this, as we talk about automation, there are some people who do some in-house automation, but basically having an engine that's out there that basically allows you to do the calculation, provide this accurate solution, right? It's going to validate all this stuff, rates, what to do with use tax. The automated system is something that's going to be very important. And seeing that most of our people at 46% had said 25% or less have that, this is an area you're going to want to focus on, right? There's reporting, right? Reporting is going to come out of this automation. You're going to see reporting, what went out, what was compliance. It's all going to come right from that automated system, right? It's going to let you know, what are you authorizing, right? What are the decisions that you're making through this? What decisions and how they affect tax are all going to be spelled out in this automation. You're not going to have to manually look at it, determine something, nor are you going to be able to say just everything from this vendor, I'm doing this. The system's going to evaluate it to make sure that something on that vendor's invoice did not change. So you may have a manual process that says something from ABC company gets done this way. But how do we not know that there's details within that invoice that change that make a different tax determination of ABC company based on the content of the invoice, not just by the vendor and how you feel as if that vendor should be taxed or not, right? These reports that we look at are going to tell us these things. What is my area where I didn't have tax? What is the area where I self-assess tax? You're going to see the areas that know that you have to work on. It may be consistent by a vendor. It may be consistent with an area of business. These reports are going to help you grow your business to be able to look through these, right? So it's going to make it flexible, easier to manage, right? You're going to be able to report back on this, right? You're going to have time to take some of this stuff. You're going to educate accounts payable. You're going to educate the purchasing department. You're going to educate everyone what is needed for that whole P2P process from the inception of a purchase order until the taxing jurisdiction gets their money. What are all the steps that are involved? And this automation is going to help with that. Exposure. Can't say exposure enough. You potentially do not know your exposure. You could be guessing at your exposure, right? You could be taking a blank amount and saying, I do 10% of whatever's out there, whatever has been in an audit, right? So you look at that and determine, is there issues with that and what are the exposures, right? Plus, you're spending time on the recovery, right, of income tax and audit activities, right? You're having to spend time looking these overpayments. A systematic way could put something in there, whether it make the exact decision you want, or it reads it and does something with the information that puts it in an area that you have to review and make a final decision. Maybe you put something in place and says by a certain threshold of dollar amount, maybe something that hits a particular cost center or area of business you would look at, but at least has it's reported so you can look at that, right? Plus, it provides you that complete picture. Everything that's needed for the entire life cycle. You can see it all in front of you and track where it's going. So another one of these slides that we had from this survey, right? 61% use automation in their tax determination process, right? And we talked about how we're seeing that a lot of people on this call had not been up to that high level. 54% said less than half of their tax determination process are currently automated. Again, this survey was done by people and they said it was higher than what we had on here, right? But expanding the automation, right? Getting these improvements is what they all want to do. Everybody wants to see these numbers. Everyone wants to get this area. They know they're there. And we certainly understand that there is bandwidth issues, money issues. Where do they want to go? And I think it's kind of up to each individual company to look at where that exposure is. Are they writing a check every 3-4 years for taxing jurisdiction? Are they coming back every year? Or do we have steps in place, automated steps in place, so that that amount of reduction of risk goes down, right? If we look at it and we say, this is the risk that we have, and whether we've sent use tax on things or we look at the areas and we're not 100% sure. We don't know if we have the risk, right? We're waiting for the next audit to determine, do we have tax on this? And in that case, we do stuff like that. We'll book a reserve. So the reserve is just there, one, to recognize that we know that we potentially have an exposure, and two, to put funds in there to cover so that when it does come up, you are financially ready for that. So there are two key areas to consider, like making sure you have a reserve or making sure you've done everything on the use tax side. Let's see. All right, so this is our next polling question. So, do you plan to implement a new automated tax technology solution in the coming months? Right? So, are you going to put something in the next 6 months? Right? 6 to 12 months? Not in the next 12 months. There's no way we can do it. Or we already have a solution. That would be great. So let's see what our answers look like. I was hoping it wouldn't go this way, but currently we are 76% say not in the next 12 months. So that's letting me know that few people have a solution that are on here, and that they're currently today, there are no steps in place to automate that system, right? I would say with that, then second place is coming back with we already have a solution. So 20% of the people on here are saying that they have a solution, which is great. That's good that you have the solution. Hopefully that solution is working for you. Hopefully you're also doing some due diligence with that solution to make sure that anything you're doing from a business perspective that changes, the solution is automatically updating based on those changes and it doesn't become a manual piece. So I think we're going to kind of move to the next slide from here. It looks like we're saying we're ending at 73%. So that makes up the bulk of the people saying that they don't have something the next 12 months. So I'd really work to get something in place. It's only going to make your life easier. It's going to make your job more the accuracy of what you're accruing, what you're keeping. It also gives you an opportunity. You know, you get a process in place and you're showing this automation. It gives you and the individual a chance to show off what we've done. We have these exposures. We put this in place. We've mapped it. We have it, and we're reducing the risk of the company. All that are favorable to the employee and our management to be able to share with senior management. So let's go back. Okay, so talk about tips for automating indirect tax, right? So we want to kind of go through some of these things, right? The transition, some of these things, right? Implementing a tax action at the same time you're upgrading your ERP, right? That's great to do. I know some people would look at that and say that endeavor is never going to happen. We're never going to allow to do a full implementation of our ERP and then add on a solution at the end. We're saying that that is a best time to do it because then you have everyone there. You're doing your mapping, you're making all the decisions at the same time. But if you can't, and you certainly get that ERP system in place, make sure that that ERP system will work with the solution that is best for you when you're looking at the procurement process, when you're going through that system, right? Choose a solution that's integrated with your ERP. It's what I was just saying. Make sure that's on there. Choose a solution provider, right, that offers updates, right? You want to make sure you're consistently getting updates. You want to do away with those manual processes. You want to make sure there's some solution that at the beginning of the month, whatever goes through, anything's updated. And that's going to be important to have that solution. You probably have something in place on the sales side, but it would be great to have that on the purchase side to make sure that whenever an invoice is processed up against that, it's reading those regulations and it's assessing the accurate tax, whether it be on there, self-assess. But on the flip side, by doing that evaluation with changing that system, it gives you an opportunity to pull out potential errors out of there so that you can use that to determine where I may have exposures, right? Partner with the solution provider early, right? Meet with them, understand what the requirements are, the needs, understand every piece of it, because that work that's being done can be drawn out for quite a long time. And you have to make sure you understand it, document it, have it in place, right? And be aware of how many different processes indirect tax touches, right? Most people don't know everything that affects indirect. And some of our senior levels just think of it, it's in-house, I got it, you have the software, just move on and do it. And they don't understand all the steps that come into play with indirect tax. So it's good to document that stuff, talk with people, make people aware that there are issues that you do have with the way procurement's done, and you do have these exposures, and you want to make sure you talk about those different touch points. Okay. So we're going to wrap up this and move into our Q&A in a minute or two, but indirect tax, right? We know it's complex, right? We've talked about how everything with indirect, whether it be on the procurement, whether it be on the sales side, all of those things play, and they're particularly difficult depending how and what the relationship is with everyone within your company and how it is with your jurisdictions, all those things. What's the bandwidth of people, right? But you can gain efficiencies, improve, and eliminate manual tasks, right? And I know a lot of people look at this and say, well, what do I do? If you're a good leader and you're having people that are handling manual stuff and you're able to give them something, take something off of your plate if you're the leader. Give it to them, challenge them to do something more, and then you eliminate some more manual tasks by doing that, right? Reducing risk of overpayment, underpayment, we talked lengthy on that. We can do anything we can to reduce those risks. All of these words, risks, implementation, exposure, all these are keywords that a CFO is going to perk their ears up to hear to be able to say, is there a solution you can put in place to reduce that, right? So be aware of how it touches everyone and empower the tax department to devote time, right, to more strategic activities. What are they doing? If I automate to this system, I can do this. I can be doing reverse audits. I can be doing other compliance stuff because I have a solution in place that's doing stuff. I know I need time up front to do its mapping, and you don't have that, but little by little, chipping away at that to determine its mapping and put something in place is going to be tenfold for the person who's responsible for that tax, right? So you're going to also talk about reducing errors, right? Allowing for one-time payment of invoices and improve supplier relations, right? Nobody wants to go back to suppliers and say, we have it, but we're not paying the invoice because it's incorrect with taxation, right? That vendor is angry because they gave you that product or service. They need that money. They want it. And then now because something wasn't done incorrectly, now it's coming up, right? But it gives you that opportunity to improve the relationship with that supplier, right? To be able to say, hey, you don't have tax on this invoice. Our evaluation says you should have tax. It gives that vendor an opportunity to look at what they're doing to reduce their audit risk because they may be shipping to thousands of customers and have it incorrect. And you're one of one or one of many that has stepped up that you've learned that there are potential risks and errors with their invoice. So they should be thankful that you had that. So let's kind of move into the Q&A. I don't know if Eric, you're going to kind of jump in here on these.
Yeah, let's open the webinar up for Q&A. Just as a reminder, you can submit your question using the chat feature. So why don't we just get started with our audience questions. The first audience question is, what impact do new e-invoicing rules have on indirect tax compliance?
Yeah, I think e-invoicing, of course, if anybody's been really following it, there's not a large presence on that today in the US. It's more international. It's working on those e-invoices. I'm not saying that it's not being discussed and moved forward on the US side, but it is happening. So it's going to affect the indirect tax compliance based on the transaction of the e-invoice is going to give the money to the jurisdiction immediately. It's going to get there quicker. So it's going to put more of an emphasis on the tax departments to do their evaluation, where right now you're evaluating what's happened in 1 month while you're doing your taxes. If the funds are getting to the jurisdictions quicker, it is going to put more emphasis on the tax departments to validate after the fact that the tax has been sent to the jurisdiction.
The next question is, we are having trouble building the business case with our senior leadership for greater automation of our tax function. Do you have any thoughts on that?
Yeah, I think that what's difficult sometimes with senior leadership, and we talk about two sides of the world. We talk about the indirect and direct. And for those of us that are on the indirect side, always feel the burden of how the direct tax always seems to get, the money and stuff like that. I think that building some of that case is looking at those purchases that you're making. It's going to be a much better case to build if you can identify the exposures that you have, right? If you use some of the examples and you go and you look at capital expenditures and assets that are being purchased and say, wow, we bought, this new piece for our building and it made up 10 invoices or one made up 50 invoices. Did they have tax? Did they not? Should they not have had tax? I mean, that's true as well. But looking through that and finding potential areas that you do have exposure or where you think you may have risk, or recognizing that you think you're going to have to build a reserve on something, things like that are usually the things that make leaders listen up to you because they know it's going to be money coming out of their pocket come audit especially.
Thank you. The next question is, a government entity is exempt to tax. The question, if I buy and pick up item from another state, is it true the item becomes taxable?
Well, I guess we're saying that it is a state government entity is exempt to tax. To tax, the question is, if I buy the pickup item from another state, does it become taxable? So basically what's going to happen is if you are exempt in a taxing jurisdiction, if you have an exemption for one state and you're exempt in there and you go and you purchase from another state, that other state should in fact recognize that we're shipping into state number one and should recognize and not have tax on there because you're providing them an exemption certificate. So I'm assuming that's the question, but if it's not, please add to that question and we can talk more about it.
The next question is, what's the biggest mistake you've seen companies make in trying to automate their tax functions, and how did they get past it?
Biggest mistakes I think in automation is probably rushing through that. They're looking at it, they're putting some process in place. I think they have to specifically spend time in making sure that they are mapping accurately. So I think in any type of automation, whether it be on the purchase or on the sales side, somebody has a manual process with a ledger in front of them that says, if we sell this, put tax on the invoice. If we sell this, don't put tax. That process has to be automated. Plus, that manual process has to be reevaluated, because often manual processes are not evaluated to see if taxing has changed. It's been written down, this is what we do, but there's no systematic way to say, oh, that changed last year, or the rate changed. There's no systematic way. So some of the mistakes they make is trying to automate it without doing a full evaluation of the taxation of what they're doing. How do they get past similar situations like that? Is recognizing where the error is, booking a reserve in case it's out there, notifying those vendors that these are the issues that we have, to try to make that correction. So they have to kind of get past it. It's kind of eating a little bit and saying, hey, we messed up, this is where we're at. But to get past it, it's not recognizing where this issue is. It's recognize it and coming to leaders with, here's the problem we had, here's our exposure, this is what we're doing. Not just giving them the end result. This is how we're correcting it. We see if we do this, we're putting something in the books, and we hope it goes away come audit time.
Thank you. The next question is, we operate in both Ukraine and Turkey, and let's just say the operating environment is very difficult. How can our tax team adapt to some really tough circumstances?
Well, I think it depends if you're talking of a U.S. operation, talking with a Ukraine and Turkey operation. Things are completely different just because of a sales tax and use tax versus a VAT tax. So I think that some of that right there makes it difficult in its sense. And remember, each of these countries is used to doing taxation the way they do it. US, we're doing things different in 50 states, but we're still doing something across the board. So how do they adapt to some of those things is basically, I would think that it's understanding how they operate, right? And then relating that to how you operate and coming up where those differences are. Some of the language they use, some things used mean different things. So I think it's working to make each of you understand what you're doing so that when you're talking apples and apples and not apples to oranges, because you have different meanings of different things. I think the difficulty is making sure you understand and how the language of a particular description of something is the same, and then learning from that moving forward.
Thank you. The next question is, what features and functionalities are absolutely necessary for automating indirect tax?
Well, I think it has to have the features and the functionality. It has to have some way to assess accurate taxation, right? There's got to be some type of validation in this automation that takes whatever data you're putting in and validates its accuracy for taxation, right? So you could potentially take something from your ERP system, put it into a tax engine. It's got to read through that tax engine. The two ERP and tax engines have to work together. So specific features and functionalities, mapping has to be on there. There has to be ways to report out of that automated any type of audit reporting that shares, this is the report I'm going to give to an auditor that has been reconciled back to my ERP. This is my book that I'm going to give them, that I'm going to be sharing information from them. So you got to look at that information and see. So that would be something to look at.
I want to skip around to another question, which is it possible or standard to automate the verification of indirect taxes at the time of the purchase order during the P2P process?
I would say no, there is not, because there's no, my understanding, there is no purchase order system that has an integrated tax solution to it to determine taxation. And so purchase order systems and contracts all say this is a purchase, less tax, because on that purchase order, the purchase order doesn't give a detailed description of an item. It doesn't say potentially where it's being shipped. It doesn't look at a physical address and look up a zip address +4. It doesn't have it mapped to a category in a purchase order environment. So I would say that there is not anything that I'm aware of that does that today.
The next question is, We can't keep up with constantly changing VAT rules. Help! What do we do?
Well, I think same thing on the VAT rules. I mean, it's like any type of business. An automated solution is going to have those rules in place for you. Anytime you ship or buy or sell something, anything you have in your ERP system as it flows through to your taxation engine, it's going to read through that. So it sounds like that question is we can't keep up with these. What do? We need help. Automate. It sounds like you're doing a manual process today and you cannot keep up. An automated system is going to do it for you. It's going to push a button. It's going to give you the answer.
Great, thank you. I want to jump again to a question that just came in. How does the software help to make a decision if a good or service is taxable or non-taxable?
So the software is going to be in place and you're going to sell, let's see. I'll give an example of a Kit Kat bar. I always like using this Kit Kat bar, right? So most people look at a Kit Kat bar and they determine it's a candy bar, so it should be taxed as a candy bar. Well, in some taxing jurisdictions in the US, it's a bakery item because it's a wafer covered in chocolate. It's not a candy bar where it's 100% chocolate. So it has different taxation. So this software has all these rules in here, cosmetics to personal items to cars. All this solution has all of these rules in here. You're going to determine based on the product and service that you're selling where that is mapped to. So as an example, you're selling a widget, you go in and say, where's the rules for widget? That's the category I'm picking, right? So when you pick that taxation category, there's rules in that engine that say that is taxable in 15 states, 4 counties, 3 cities. That gives you the information. So once you pick the category and you sell, when you then sell into Georgia, was it taxable? It's going to put tax on it. I sold it in Mississippi. It's not taxable. It's not going to do it. So it's going to know, the software is going to know based on its programming that's in there that when you select a category from a category tree, it's going to know if you say, I'm selling this product or this service and I'm shipping it to this location, it's being used here at this address, it knows whether it's taxable, non-taxable, and what rate of tax should be assessed on there.
The next question is, we are really struggling to complete our registration with the local tax authorities in a company that we're expanding to. I think they want a bribe. Do you have any advice for us?
So I think that, it's tough. So this is basically saying local tax in a country we are expanding to. So it's not US, it's not going to a specific, so it's something in a country. So a local tax, I mean, certainly things on the VAT side have a significant difference on the transaction tax side on the US side. So these local authorities often, it's a different type of way of life when you're doing VAT registrations than are just doing a business license. So some of the areas that we have with them is basically, I would find that what would work for me is asking them, what is it that you specifically want? Ask them to spell out these 5 things is what we want, right? Because then you're not just filling it out, sending it back, it's rejecting. What are the things that you need? Then you have 5 things to tick off that I did and open that communication with them until you get that. Okay, you said these 5, these are done. We should be good, correct? Yes, no? And then you have that relationship with them. And hopefully you can get through all that building relationship and not have to bribe anybody.
Great, thank you. The next question is, do you have a software recommendation to use with procurement to capture use tax?
Well, I would certainly say the Vertex use tax solution is ideal to use. So I would just leave it at that, that it is I've used it for a number of years. I used it when I've been an employee of Vertex and I used it when I was not an employee of Vertex. And I would say it's state of the art and it's the best one I would recommend to use.
So how do you think the tax automation field is going to evolve over the next couple of years?
I think that as things continue to grow, I mean, we certainly are growing. Businesses are growing, automation, AI, everything's growing for industries, how we're reporting, e-invoicing. We're seeing all things that continue to keep moving us more to be able to put things automated, right? We see that taxing jurisdictions want their money quicker, right? We also want to be able to collect money quicker, right? Everything's kind of speed. So anytime you talk about doing something with speed, it's going to mean automation is going to get that to move that because the manual processes are not in place. So they're not going to make it as automated. So do I see, is the field going to evolve? It's going to continue to evolve with automation. We could be talking about automation today, right on this call, and probably in 2 years, we're going to talk about different automation that we did not know about today.
Great, thank you. Unfortunately, that's all the time we have for questions today. Thank you, Larry, for that amazing discussion. Thank you, everyone in the audience, for joining us today for this excellent webinar, and enjoy the rest of your day.